Good afternoon. This is Mayor Valensky with Driving Markets. China is going into deflation. And when China goes into deflation, that is going to impact the whole of the Western world. So every Western economy is going to feel the full brunt of China going into deflation. What's effectively happening is that the property sector is in pretty poor state, and so is their retail sales and the manufacturing production. The yuan, which is the Chinese national currency, is something like a 15-year low. Not only that, then huge debt. So when you take all of the picture together, you've got a real major problem, considering it's the number 2 economy. Now, the money viewers have sent messages as how does that impact the property market? Quite simple. A lot of US companies, a lot of European companies, property companies have invested in China real estate, whether it's through the huge companies like Evergrande or other individual or other publicly listed companies, property companies within China, then the US, European and UK property companies obviously will be impacted by the downturn in the asset value or the values of those properties, and obviously by the debt to equity ratio. So when the property sector goes down in China, that is going to impact absolute minimum property companies and investors in the West. So you've got companies like Country Garden, which is now not paying any of its debt liabilities. Remember, Evergrande went bust last week, or effectively filed for bankruptcy using Chapter 15 in the US to protect itself and try and rearrange its debt. And of course, Country Garden is going to try and rearrange its debt. And the Chinese government, or the People's Republic of China, which is supposed to be a model of a communist regime, is not pumping money into the private sector. The private sector, which is 60% of GDP in China, is on the downward trend, and it's suffering from all the new legislation coming out by the Chinese authority, which what they're trying to do is pull back control to the authority and the government, and not give any liberties or any types of entrepreneurship to the private sector. Remember, I said the private sector is 60% of GDP in China. So it's a massive impact. As the private sector goes down, then China will continue sliding. So some viewers have said that China will pick up next year, and you see China will dramatically grow. I don't particularly believe it. I think we're in now for a Japan look-alike scenario where China itself will follow Japan, what Japan has suffered for the last 10, 15 years. I think China is going to do the same, where it's going to have, to a degree, a sort of non-growth stagflation type environment where they're going to keep on trying to stimulate the economy. Nothing's going to happen. Eventually, they'll come out of it, but China doesn't want to lose face amongst the West, being a communist authority. And therefore, as a result, it's going to continue producing a lot of lies when going forward. And moving on to the rest of the market, Nvidia came out with some great results yesterday. The shares after hours moved up 12.5%. Nvidia is well overvalued. Its PE is in the hundreds. So in other words, its expected earnings going forward need to be huge in order to justify the present share price. The present share price is not justified. So I expect Nvidia to come off all the way back down to around about the 430 level near term. Could be wrong, of course. Could continue rising. Could see it at 550, 600. But I expect a short-term profit taking as far as Nvidia is concerned all the way back to 430. Tesla I expect to pull back from 240 back down to the 215, 220 level near term as well. The tech sector will be impacted by rising yields. 10-year treasury yields is one to keep an eye on, because that will impact the tech sector, which is hypersensitive to yields as far as the US is concerned. And that's more or less it, because it's a holiday period. We'll just keep things in a shortened version. You can share, subscribe, comment. This is Mayor Valensky with Driving Markets. Good afternoon and have a good day.